Welcome to the Old Capital Real Estate Investing Podcast with Michael Becker and Paul Peebles. During this program, you will hear interviews with real-life successful investors who will share their stories and provide useful advice on how to acquire, finance, and operate apartment complexes. Now, here they are, Michael Becker and Paul Peebles.
Welcome to the Old Capital Real Estate Investing Podcast. I'm your host, Paul Peebles, National Underwriter for Old Capital, and joining me today is Michael Becker.
Hey, Paul.
And also James Zeng. Hey, James.
Hey, Paul.
So before we kick ourselves off in the podcast today with 4 special guests, I always want to remind everybody, could you do me a favor? Can you please give us a review on iTunes? That means so much to me and to the gang here at the Old Capital Podcast. I appreciate it. So 5 stars would be great. So after you're done listening, please give us a rating. So in the podcast today, we have 4 guys that are now multifamily ownership. They own properties here in the Dallas-Fort Worth area. 3 of them live in California, in Northern California. One of them just is a transplant from California to Texas. Welcome to Texas.
Thank you.
And so, Mike, you know these guys, and Mike knows these guys because we were out in Northern California back about 3
in November, I believe it was.
Yeah, 3 or 4 months ago. And these are great guys. And besides just being great engineer kind of guys and checklist mentality type of guys, they're great and gracious hosts. When we were out in California, we had an opportunity to go to Facebook and also Google with these guys. We had a personal tour with these guys, showed us all over the campuses of Facebook and Google. And I'll tell you that what a treat. We saw some
unbelievable. I couldn't imagine that everything on the whole place was free. So if you wanted coconut water, like $5 coconut water at Facebook, they had it, and we even had frozen yogurt. So it was unbelievable how they treat their employees out there.
And we were treated so well by my 4 friends here. So in the podcast that we have these 4 gentlemen, I'm going to kind of kick it around. If you could introduce yourselves, and then let's get it going. I'm going to have James ask him some questions. Moshi?
My name is Oshi. Started investing in real estate like 5 years ago. Initially single family, and then moved on to multifamily.
Albert?
My name is Albert. I'm also around 5 years into real estate, and I'm part of this investment group called Lifestyle, which basically kicked up what we do.
Leo?
Hey, my name is Leo. I'm software engineer and started investing in single families about 3 years ago. Now moved to multifamily properties.
All right. And again, Boris.
My name is Boris. So I'm investing in real estate since 2010, bought a bunch of properties in Arizona, Texas, single families. And as of 2015, moved to, with those guys, we moved to multifamily market, and we purchased few deals in DFW.
Now, have I noticed, is that a Northern California accent you guys have?
It's mixed between Hebrew and Russian. So
Slightly further away than California.
So Boris, where exactly are you from? And tell us a little bit about your passage to Northern California.
I was born in Lithuania, and when I was 15 years old, I moved to Israel, and mostly lived there for like 20 years. So went to school, army, university, worked there for several years, and in 2007, we decided to move to US, and we ended up in Silicon Valley. And yeah, since then, being California's resident.
Fantastic. I'll just ask, Oshi, when did you move to the United States?
2007.
Did you guys know each other before you guys came?
Yes, we did.
We know each other from 2000, actually. We work at the same company in Israel, so like we know each other for 17 years.
Wow. So that is really where the partnership came together, is you guys knew each other from being software engineers.
Hard work.
Hard work.
Chip designers.
Sorry, that's where the smart people are in the hardware side. Sorry about those software engineers comments.
It's the same, pretty much. Yeah.
So let's talk a little bit about what you guys have done in real estate, and I'm going to have kind of James kick it off a little bit about asking you guys some questions about how you got there from here.
So you guys have about 200 units or so right now. Maybe take us back a couple years ago when you were looking at getting into multifamily. How did you get that first deal under contract, and tell us what you liked about that deal?
So I can tell you it was definitely a frustrating process because we've been looking for like maybe 3 or 4 months and we got nowhere. It's kind of like it's not from lack of trying. It's like we talked to many agents, brokers, just tried to get something and there were no results. And then somebody referred Paul to us and we started with pre-approval, and then it didn't take much longer, like a lot of time after that, and Paul basically said, I think I found something for you, and the rest is history.
I think the way it worked and made it easier for us is basically we established the company, created the LLC, funded it with all the money that we need, and at the time that we submitted the LOI, we actually showed all the funds and company was there already. So seller was kind of sure that we can close, and Paul was there also. So
Okay, so you
in
had-
a picture.
Okay, so you brought Paul in, deal got done, you had the equity set up, and then we brought the debt on the deal, so you were able to close that deal, and that was 55 units. On that deal, you guys have owned it now for 15, 16 months. What have you guys done on that property, and any lessons learned on that first property?
Yeah, so we did a lot of rehab. We spent probably $300K total on a bunch of exterior repairs like roofs, balconies, and new HVACs. What else? I have
A little
the
bit
list
of
here.
parking lot.
Yeah, plumbing. We built storage units there. So a bunch of improvements and repairs. And I don't know, right now we're in the point of discussing maybe selling it and just taking equity and putting it into the larger deal, or maybe refinancing it when we're closer to like 2 years mark. So we can also pull out the equity and move it to a bigger asset.
So how did you guys manage? I mean, 300,000 on 55 units is a substantial rehab. How did you guys manage that if you guys were all in California?
So we basically gave a lot of trust to the management company and the contractor that we worked with, but we also visited every, like maybe 6 weeks or 2 months, kind of like watch the improvements and make sure that things are done, some kind of like the way we expect. But we definitely use the management company a lot. We have to trust them because we're not there. So.
Okay.
Now it's kind of easier because we have local partner. So if we need somebody to just go there and, take a look on something, he is available. So
Okay.
Leo can just drive by and take a look.
So after you completed the rehab, what did you guys do in terms of rents on the units? Was there a big pop in rents, and sort of give us an idea of how much you've raised the NOI from when you bought it?
It was somewhere between 10 and 15%,
Okay.
something like that all across the board. In terms of NOI, I don't remember. I don't have the numbers.
So the deal, Boris, you mentioned when you were looking at the deal that you had an account that you were able to pre-fund and show the seller. That first deal you just did it with your own capital, or did you guys take outside investors and do like a syndication to take it down?
So we kind of felt that we don't want to take money from other people on our first deal. And we actually decided that we will do it with our own money, like 4 of us. And looking back, it was a good idea because we learned a lot on those properties. And you don't want to explain investors why you're not distributing funds for first maybe a year or so and stuff like that. So yeah, it was a good school, and and I'm glad we didn't raise money, and
it
was
did
a
give us
good decision, I think.
It did give us the confidence to actually go ahead and raise money on our third deal.
Okay.
So
By the way, back to NOI increase. So on Colonial, it went up by 30%, and at Town Central, it went up by 54%.
Okay. Wow. Great.
In 15 months or so.
All right. Great. So that deal's going well. And after, you got your feet wet on that one, what was the next deal that you guys acquired?
So the next deal was 143 units. One of them is office, so it's really 142 rentable units. It's in Arlington, and in this deal, we actually have passive investors that came along with us.
So what did you like about this second deal? I mean, you almost tripled in size. Did that help in terms of management company, and then also in terms of economies of scale? Was it just, how did you guys increase the size of that acquisition so much?
It definitely helps, because now we paying less for management, and maintenance is less expensive. So yeah, economy of scales definitely helps there. So, and location wise, I think it's much better located because it's on big road there, and we get a lot of traffic, and we don't have issues renting those units.
Yeah, talk a little bit about that, because in your first two deals, it was on a street that was kind of a neighborhood street. It wasn't really a busy street that it was on.
Yeah, it was not.
Was it difficult to attract tenants at that property because it wasn't on the busiest of busy streets?
I think so. Even today, so most of the walk-ins, they coming from the Craigslist ad that running there.
Okay.
They not just walk in because they saw the property, they drove by, because you cannot see the property from the main street.
That's right.
Yeah. So, and that is in Arlington property, we get like 90% of the walk-ins, the people that just drive by and see it and just walk in, and
that's right.
Some of them ending up being tenants.
So again, in the first two properties, it was on an interior street. The last property you guys bought was on a fairly busy street, probably be 2-3 lanes. I mean, it's a fairly busy 45 or 50 mile an hour street. So that property has perfect eyeball appeal.
Exactly.
When you're going by. It's a little bit less than maybe half a block. So it's a large property on the street. So you have maybe 4 or 5, 6 seconds that people are driving by can eyeball that property. So it has great street appeal.
And now we just put huge signage there on the building itself. So we're waiting for city maybe to come out and tell us take it off, but so far it's there.
No, actually there today, and the management company does a great job in putting balloons all over the place, and they really, really make it visible. So that's
a little pro tip. These cities like to have things called permits when you put big monument signs up. Yeah. So sometimes they get upset. So hopefully you get away with it.
Yeah.
So far, it's already for a month there. So far, an inspector was there several times, and he didn't mention anything about it. So no convoy.
So on that property, you've owned it for a little bit less than a year. What have you guys done besides signage on that property?
We've actually done a lot. But the balconies were not in good shape, so we replaced a couple and we fixed the rest. We are now working on the roofs. We built a dog park, which should help with retaining tenants, keep them happy in the apartments.
We built patio fences. So right now we built only 11. We wanted to see how it rents, and if it will go good, we will build more. But right now we're getting so the cost was $1,100 to build it and paint it and everything. We're getting $50 increase for those patio fences, which is great. We will get our money back within 15, 16 months. Yeah.
How did you find this property?
It's again goes back to you, Paul. And
I'm not asking for that.
Yeah. So Paul introduced us to Nick Fluellen, who was actually owner of that property. And Nick also knew us since we bought those Garland property. It was his team marketing those deals. So he knew us, but then Paul kind of connected between us and Nick, and we put an LOI on that deal, and it was off-market deal. So we actually didn't compete with other groups, but we put an LOI. It was a long process because it was loan assumption.
Yeah, that's what I like to talk about. That's the
Yeah.
reason why I brought that up. Is
Yeah.
that you guys did not go out and get brand new debt on that property. You had to assume the current loan against the property. And then also on top of that, you had to do a supplemental loan on that property. Correct?
Yes.
Talk a little bit about what it's like to go through an assumption and a supplemental.
So initially when we spoke to Fannie Mae, they told us we will close this deal in 2-3 months. But eventually it took much longer. It took 6 months. And actually seller, at some point he was a little bit nervous, I think. But we got it done. And we had a lot of issues, mostly with Fannie Mae approvals. They just typically... the lender,
Yeah,
they don't ask for everything, don't need to be approved by Fannie Mae, but on loan assumption, it's actually, they much more involved and everything need to be approved by Fannie Mae. So those kind of approvals took a lot of time and effort. And
Yeah, typically, Fannie Mae loan assumptions on a typical transaction would typically take 2 months, maybe a little bit longer in some cases. But this one took a little bit longer. We had some immigration issues and how we were going to put that together, but we were able to solve that problem. I think that took us the longest part. We had some questions concerning some stab block panels in the property. We had to make sure we solutioned that. And stab block panels are panels that were built back in the 70s and 80s. The company eventually went bankrupt, and sometimes these stab block panels have the propensity to catch a building on fire if they don't trip to turn the electric off in a unit. And so Fannie Mae's they want to make sure those panels get replaced, and we wanted to make sure that we were all on the same page on that one. But you were able to get through the transaction. You guys closed, and now you guys have taken rents from X to Y. What kind of increase have you guys had just in the last, say, 6 months?
so it's around 11-12% across the board, and it's leasing very quickly. So probably we will revisit in a few months, and maybe we can just bump rents a little bit higher than we're doing it right now. But so far, it's 11% increase across the board.
That's pretty good.
Yeah.
And guys, we've listened to Boshi and Boris, but these two other guys, tell us a little bit about what your role is. What do you guys do? Do the books? Do you guys help? Are you cheerleaders? Tell us a little bit about what you guys do.
Yeah, so we mostly help with research, some emails, at least my part, because I still have a full-time job. And we have another project that we will talk about probably, which I'm basically running it, also related to real estate. We can chat about it.
Let's talk about that now. Tell us, because that's a unique process that you guys have. That's a web-based process. Tell us a little bit about that, Albert.
Yes, so since we're all real estate investors and most of us have single-family houses as well, one of the issues in Texas is that it has really high property taxes. And there is a process to appeal those property taxes in Texas. And since we're all engineers and we know how to write code, we come up with this idea of automating most of this process and do it pretty fast. So we have the service which allows you to protest property taxes in multiple states, which is Texas, Florida, Ohio. And it allows you to pick up the comparables, populates all the forms that needs to be populated in correct way. And what the user needs to do is just to send it, mail it to the district. And the service called taxprotest.me. So you can go and visit our service at www.taxprotest.me.
And we charge only $20, so it's pretty much nothing
for the first
in
property.
compared to all the other businesses that are doing kind of those protests.
Okay, Leo, anything else to add on the Pertex test?
So just generally speaking, you spend about 5 minutes on the website, and in the end you get forms filled in that you just need to sign and send to county. And all this for just $20.
Okay.
And the success rate, so we released it last year. The success rate was like around 75-80% of appeals were accepted by the counties. So we're pretty happy with it.
Okay. And is that single family, multifamily,
Single
commercial?
family. Only single family.
Only single family. Okay. Gotcha. So I guess jumping back into multifamily, I mean, you guys are obviously looking for your next deal. Tell us a little bit about your next deal and then also maybe about some of the events you have in California.
Yeah, so about 6 months ago, we started our own group, our own meetup. And it started with, a couple of dozens people, basically people we knew, and some of them were our investors from the Arlington deal. And we rented a room, we kind of gathered everybody together and just kind of like introduced ourselves, kind of talked about what we did, what we achieved, and kind of like, let people know us. And from that point, today we have over 200 people in the group. Basically, in each meetup, we do maybe 40 people arrive, 50 people arrive. Sometimes we present our own presentation that we write. And sometimes we bring speakers in, such as Paul and others.
And Michael.
And Michael.
So this group is kind of, right now, it's just for mostly fun and just getting to know people and share knowledge that we have. But eventually we think it will be, some of them will become our passive investors in our next deal. So that's the goal, kind of build a team of investors there in California.
You guys mentioned that Paul and I went out and spoke at it back in November when we had our frozen yogurt at Facebook tour. So that was very nice. So you had, probably 40 to 50 people there, mostly high-paid software or hardware engineers, some sort of IT professionals, because it's based in San Jose, California. So if anyone listens to this podcast that wants potentially to go find out about it, what's the best way to find out about you guys' meetup group and, maybe potentially attend? Because I know we have quite a few people that listen up in the Bay Area.
So you can just go to meetup.com, and the name of the group is Single Family Multifamily Investing Out of State.
And then that's in Los Gatos.
That's in Los Gatos, yes.
So another way to find us and the meetup, we have our website where we post updates to our investors and some general information. So it's called wealthgrowinvestments.com. And on that website, there is a link to the meetup group, and you can also contact us through that website.
So now you guys have owned multifamily properties for the last 15, 16, 17 months. You guys live out in California. You have a property manager that manages your properties here. Has there been some challenges on owning properties here? Would you recommend it for people that live out of state and buy properties in other states? And what would be some of your advice for them?
If I would recommend it, yes. I mean, if you're ready for it, if you're up to the task, then definitely I would recommend it. It's not easy. There are challenges. Not everything works as planned. I'm very happy we're doing this.
And how come you guys are not investing in Northern California in your backyard? And why are you laughing when I say that?
Prices, and even more so, rent to price ratio.
That's what you're going to get out of an engineer. Thank you. But on something like that, live in California, but have your money at work in Texas. Would you say that would be correct?
Yeah.
Live in California and have your money work in Texas?
Yes. So far it's working for us. So I think it's definitely not a bad idea.
How difficult it is to find your next deal? Or do you have people calling you, brokers calling you to try to sell you your next deal? So you're not a virgin anymore. You've bought 3 multifamily properties in the last 18 months or so. Is it becoming easier to get recognition for people to try to sell you another property?
So I definitely get some emails from brokers occasionally, and hopefully it will be easier, although market is kind of really hot right now. But we will see. We will start looking soon, and we will let you know.
Paul, you're not just going to give them another off-market deal right here? One of your pile you just pick up and send over there, huh? No. So in all seriousness, so we're probably 2 years in the business now from the time you guys decided to do it to today, it seems like, and you've been owning for almost a year and a half. Yeah, maybe is there anything that you know now, 2 years into this process that you wish you go back in time and tell yourself starting out, what are some of like the mistakes you made, or maybe some of the things you learned that could shortcut it? If I'm an aspiring apartment owner, you have any advice for me from some of your experiences?
So on Garland deal, the big mistake was that I believe we didn't fund fully the rehab. We thought some of it will come out from the cash flow, and it was not a good idea. No. Yeah, exactly. Yeah. So it wasn't a good idea, and we still kind of fighting with it, because instead of getting cash flow as we hoped, we still spending money on the property. And that's why I was telling that we were very happy that we didn't do passive investors on the first deal. On Arbor Terrace, though, we very, very well capitalized, and hopefully, as it shows right now, we will even have some, probably 30% back from the lender of the rehab funds, because we won't spend it, and it will be just emergency fund.
Any lessons learned from when you went out and raised money? Any sort of mistakes you made on the first on the Arbor Terrace deal when you go out and raise the capital? Any things that were some challenges that you wish you could have a do-over and do better, or your lessons you'll take into the next deal?
On that deal, it was pretty easy because it was mostly friends and family. So, and we raised money probably within a week from where we started. But yeah, next one, hopefully it won't be challenging because people get to know us. And
So what questions did those friends and family ask you guys on those deals to get comfortable with investing?
So that's a good thing about California. People have a lot of money and they don't know what to do with it. And basically they asked us, okay, you're buying a property. Show us what do you think you will get from there. We show them some numbers, our like analysis of what we think we will get. And they just signed the PPM, and next day they were ready to send funds.
Yeah, but we did assembled all the people, potential investors, in one place. We did a presentation, we explained the risks, we explained how it works. And most of the people already knew us, what we do. So they had a background of why we're doing it. So it was easier.
And some of them just asked us, okay, you're putting money into the deal? I was saying, yes, okay, I'm also putting it.
So that's a good point, right? So when you're out there trying to raise money and do deals, everyone wants to have aligned interest in these deals, and that you have skin in the game. And if you're not willing to put your money in, or you have very, very little money in, it kind of doesn't necessarily show your confidence in the deal to potential passive investors. So I think that's a good takeaway as well. And so, if you don't mind me asking, how much money did you guys have to raise on the Arbor Terrace deal?
Almost 2.3 million.
Almost 2.3 million. So kind of going forward, what are you guys looking at as far as like deal sizes for the next potential deal? What is kind of your target range?
So longer term, basically our goal is to just grow. And next deal specifically, we're going to be looking at 250 units, something like that.
So what are you thinking that's going to probably be closer to 15 million?
No,
million?
Probably less. Like we're thinking maybe 10 or 12.
So 200 units, maybe 10 million, something like that.
So try to do a similar equity raise as far as like $2 to $3 million, or you guys, I mean, if you do about 10 million.
Yeah, maybe a little more, but yeah, something. I mean, we're not going to go to much more than that.
Got it.
Yeah, maybe 250 will be a little bit large, but we will see. Yeah.
No, I mean, I think that was a good point that you brought up in terms of really, building your investor database as you go along, so that when you do find a deal, you guys are ready to go, right? Because even though the loan assumption was a little bit longer than you expected, but your equity raise was pretty quick, right?
Yes.
Cool. And the seller actually wanted us to raise money and show him that we raised that money and we're ready to move forward. Any
funny stories since you guys have bought this property? How about anything going on the Garland property in the laundry room?
Can we tell it on the podcast? I don't know.
You can tell in the podcast what happened.
Yeah, so we had a high school just across the street, and our manager was catching teenagers in the laundry room having sex there on those machines. And so we ended up buying those smart locks that it will remain locked during the day also. So, but it was like week after week she was catching those kids there in that room. And
now, if you would have been a good capitalist, you could have started charging for that.
yeah.
It made that
We did think about it.
a line item income piece on the operating statement. I'd love to have seen what the question would have come back from the underwriter on that one. What is this for?
And another story on Garland Properties, when we bought it in October, in November on Thanksgiving night, we had a gas leak.
Uh-oh.
And one building was without gas and hot water, and they couldn't cook. So we needed to bring the guy to fix it on a holiday day and pay them concessions and stuff like that. So we got it all fixed, and a month later on a Christmas day, we got another gas leak in the same building.
Oh,
and again, it was without hot water. They couldn't cook. We needed to pay concessions. So yeah, and the guy, apparently the guy that fixed first time, he didn't do a good job, and we needed to redo some of his work. But yeah, that's was just a few months after we bought our first property.
Unbelievable. That's not being lucky on that property.
Yeah.
So you guys have had a lot of challenges in life, come from different parts of the world. Guys kind of met overseas. You came in, say, 2007 to Northern California. You guys became partners besides being friends. And now you guys have owned multifamily properties. And what an unbelievable journey you guys have done. And I congratulate you in now operating properties in the state of Texas, living out in Northern California, at least the three of the four of you. Leo's living in God's country, northern Texas. So anything else, last moments before we end the podcast here, any lessons that you guys could tell or talk about, anything that you would want anybody else to know about how to operate properties from a distance?
One that what I told before, be very well capitalized when you enter the deal.
Yeah.
And another big lesson is that you need really good visibility with your property manager, because the first property manager we had pretty much very little visibility. It was very frustrating. We actually changed property managers, and now we have pretty much full visibility with the software, bank accounts, and everything. So especially if you're buying property out of state, it's really more important if you're local. But for us, it was also a big lesson to learn.
What's your manager?
Yeah.
That's my
manage your manager.
Manage your manager. Yes.
Yeah, because you're the asset manager. You're not really managing the property. You're just overseeing the deal, and you're looking like you're doing right now for the next opportunity that's out there. So after this podcast, I'll have to talk a little bit about a pocket deal that I have. So. You guys, I appreciate you coming to the podcast. We appreciate your time. We appreciate your business. We appreciate your journey coming to the United States. What a wonderful opportunity that everyone's had to be in the multifamily business. We do appreciate that. Anything more, Mike, we should talk about?
No, I'll just reemphasize Paul's mission. I think we're trying to move up in the rankings in iTunes. So if anyone can go leave us a review and a nice ranking, that certainly would help us out quite a bit. And James, what do we have coming up as far as events?
Sure. In April 26th, it's a Wednesday. We're going to have Mark Dotzauer from the Texas A&M Real Estate Center speaking at the Grapevine Convention Center at 6 o'clock. And then also, if you haven't received our white paper on apartment financing, you can request it at info@oldcapitallending.com.
Actually, I think we just updated our website, James. If you just go to oldcapitalpodcast.com, there should be a link on the oldcapitalpodcast.com. We can request a white paper there, as well as the sample due diligence checklist that we put together. And if anyone has any questions for the Ask Mike Mondays podcast that we're doing, that's a good place you can go in there and click and ask a question that we can answer in our future podcast.
All right, guys. Boris, Leo, Albert, Oisin, James, Mike, thanks for all coming to the podcast. I'm Paul Peebles. Have a great day.
Thanks for listening to the Old Capital Real Estate Investing Podcast. Please join us at oldcapitalpodcast.com to sign up for our weekly email updates. We'll see you next week for another great interview.